Good morning, good afternoon, or good evening, depending where you are on the planet. Welcome to the Bull versus Bear webinar on today, Wednesday, 9th August. Steve Miley on the call for Trade Day. Welcome, everyone. We're going to go through our usual regular run through here. It's going to be a fairly brief webinar because there's not much to say. There's not much really impacting onto markets. There is some volatility. Markets are moving, but there's not actually any kind of real new news. If there's nothing to say, I don't believe we need to try and say it. So we're not a news wire having to generate loads of different news. So if we look at the calendar, we just look at yesterday, first of all, just skip back to yesterday to get some German inflation numbers in here. You can see bang, all in line with expectations. Nothing really exciting there. We had some the trade data out of the US, boring Canadian trade data, energy data. There's nothing really. Overnight really is the most important data we had. So here we see the CPI data, even though still tipping towards deflation in China. The China CPI data still tipping us towards inflation. What's a little bit more concerning is the PPI data. Remember, that's the factory gate data, and China is the factory of the world, right? So the factory of the world, look, even more deflationary pressures on prices, factory gate PPI prices, okay, minus 4.4% year over year. And we're still on a negative on the year over year on the CPI, on the headline data. Month on month was up. So these actually beat, so a slight glimmer of hope, but it's still not great. You know, the world's second largest economy, the factory of the world, suffering from deflation. Obviously, the rest of the planet bringing inflation under control. Is this a sign of looming recession, or could they be exporting the deflation and help with the anti-inflationary pressures and disinflation that we're seeing in the other major global economies? Flashing back to today, nothing of note in here really going into today. If we look in here, you know, we've had a few little bits and bobs in here in the calendar coming up. I mean, nothing of any real note in here for us to really worry about. Nothing through this morning we need to look at. And then this is all, you know, we've got crude oil inventory. So unless you're trading crude, you know, it's not really, and all the oil data in here and gas data, but there's nothing really leaping out at me into today. Going into the on the earnings calendar, I'm not really focusing on this anymore, but we do get Walt Disney in here today after the bell. It's not too after. Sometimes that can have an impact on the bigger market in here. Obviously with Walt Disney branching out into all different various forms of online media, etc. Disney Channel. And so, you know, it could be, you know, sometimes it has a bit of an impact on the indices, but not usually a big one in here. Can impact the Dow as well. So, but yeah, I mean, not really holding out too much from that and really not revisiting. I'm not going to really revisit this until the next earnings season because we've got through most of the big earnings. Next week we do get Home Depot and Target. You know, sometimes they're interesting, Home Depot and Target. So maybe we'll keep an eye on those next week, but nothing really for the balance of this week. What we got on the headline data in here? Well, there's not much in here that's really leaping out. This Italian stock market's rebounding because basically there was a tax put on banks, and they've kind of qualified that tax that they're going to put on banks. So there were real concerns about that tax, and now Italian banks, because they kind of qualified it and it's not as negative as previously thought. Then we've seen the Italian banks rebound, so that's why Italy's leading that relief rally. Obviously, I'm sure Richard would have covered this yesterday, but we had a lot of the negativity we saw yesterday was on the back of the Moody's bank downgrade of US banks as well. So that obviously weighed on markets yesterday. So these they're not, I mean, they are insignificant. Here it is, Italy trims bank windfall tax after $10 billion value erase. So there was a big sell-off previously, and then they've rebounded since then, and they're leading the rebound in here that we're getting this morning. Chinese deflation, another worrying signal for commodity demand. So yeah, I mean, Italy leads relief rally in here. Let me just jump to SPY things to start your day. China deflation, article on that on Reuters as well. China tips into deflation as efforts to stoke recovery falter. So officially in deflation, but actually numbers were better than expected. WeWork still struggling in here. Amazon and ARM in here. Amazon talks to join other tech companies as an investor. The IPO that's coming up for ARM Limited, and stocks higher in here as European stocks rebound with the Italian bonds helping that rebound. Sorry, Italian stocks in here, Italian bank stocks helping the rebound in European markets this morning and helping the US futures up. So, yeah, China dipping into deflation. Rising bond yields emerged as pressure point for, yeah, I mean, it's true. I mean, rising bond yields more recently have been a concern, okay? Downgrade of US banks, so higher yields obviously weigh on stock indices in here, so higher yields, lower bond prices in this case. It's kind of the opposite to the usual. The portfolio model says bonds down, stocks up, stocks down, bonds up in price. Yeah, but in this case, we're seeing bond prices going down, so yields going higher, and that's negative for stocks in here at the moment, in the phase of the economic cycle we are currently in. And if we go and take a look at we are edging back higher in yield. This is the US 10-year yield chart. So we did get a significant move lower in yields yesterday, but stocks were also down in price. But we're getting a push back higher in yields in here this morning. What else? US stocks try to outrun the gloom. Well, they're struggling to outrun the gloom. Clearly not looking great the last few days in here, over the last week. The small sort of corrective recovery has turned now into a more significant correction lower, and we're seeing almost a short-term bearish reversal. You're seeing that on the technicals that I put on my charts that you can download in the trading room. Go take a look at those. We shifted negative on that about a week ago, and staying still negative on those charts. And another article in here. About Italian banks recovering. Not much going on the FedWatch tool in here. If we look currently where we are, we've got pretty much nailed on that we're going to stay unchanged into the September meeting. If we go and take a look now at the end of year, but where we're expecting end of year, well, we're probably still banking on unchanged. So we've got 64 plus 8, 64, 65, so 73% chance unchanged. So that leaves us with a 27% chance here that we might get one rate hike by the end of the year. Looking a little further out in here, we're now looking for cuts definitely by March in here. So there's the cut. So 40, was that 41, 51, 60, so 62% in here chance of us being lower by March. And how about by January? Actually, I haven't looked at January for a while in here. So this is unchanged. So probably they're looking for the rate cut to come in March, really. There's like a 33% chance of a rate cut by January, but then by March we're certainly looking for more chance of a rate cut than not. Okay, and no chance of us being higher than here. There's only like a 8% chance of us being higher in rates than where we are currently come March next year. So very much looking for a rate cut now around the March meeting. Let me take a little look elsewhere for you. And there's nothing, just to recap on the overnight today. I haven't got really a lot to say in here, guys, this morning. So the Nikkei was down, but we did get a little bit of a rebound in the Hang Seng despite that data out of China. If we look at European indices, as we said, rebounding here with Italian banks. If I go and open this up, you'll see the recovery in the Italian stock index. Where's the MIB? Don't see it. Amsterdam, FTSE. It's going to be the one with the big number. Where is it? I can't see it on the IBEX. No, I don't see it. Okay, US FTSE. Oh, I think it's this one, right? Yeah, it's only at 0.78. Yeah. It's the FTSE one. I think it's this one here, right? But so not a particularly strong rebound coming from, not overly strong, but the bank's certainly rebounding strongly after having a really bad day previously. And if you go and look at the US stock indices, so we're obviously down again yesterday with those US bank downgrades weighing on the broader indices. But if we look overnight with European futures bouncing, we've had a very, very tiny bounce in here. They're just stabilized more than anything else. Let's go take a look at the charts. So opening up in here. So we get a big sell-off in here, get a half-decent rebound. So the market's kind of more poised going into today. If you look at the reports, it's still negative. But we do get a decent rebound off the intraday low in here yesterday, kind of turnaround rebound. Market's kind of showing some stability. This is the S&P. Still capped, though. You see this 13-period EMA, the daily in here. I've mentioned this a lot over the months that I've been doing these webinars over the last 18 months. This is something that I've been tracking in my career for I don't know, I've used the 13 period EMA for probably about the last 10, 12, no more than that, 15, 16 years. I've really used it a lot, and I find it works really, really well. And you can see it's kind of rejected it here. This is obviously if you're a bigger longer term trader, but I think it's interesting even if you're a day trader in here, because you can see the market reluctant here to break and close below, and then we held it here, and then when it did go below, it kind of capitulated, and now is using it as resistance, and we're just below it now. And for today, that comes in at 45.43 and a quarter, so just above the peaks in here from the last couple of days. So if I zoom in on the 30-minute in here, you'll see the market's trying to put in, really, it's like a double bottom, right? So you've got a low here, and the low here needs to clear that high. And it said 45.43 and a quarter on the EMA, and that peak is 41.75. So really between like 42 and 44, if it can get above 42 to 44, it looks more positive. At the moment, though, I'm kind of holding on. It's failed, right? It's gone up there. We've had this rebound in here. So we had the rebound in here late in the session yesterday, right? In the latter session yesterday, and then a further rebound overnight, but the market still has failed at that really important level there, right? And it needs to get back above there, and it hasn't managed to do that at the moment. And whilst below there, I think you can cling to a negativity. If it surrenders, I would say 45.19 and then 45.14, it looks far more vulnerable again. So clinging to a negativity, but it flips positive back through 45, really like 45.41 to 44 kind of area. Top side, let's take a look at the Nasdaq, starting on the daily. In here again, look, that 13-period EMA, the market was flirting with it, flirted with it back here, flirted with it here, and then emphatically through, and now is using it as resistance. Again, an intraday rebound yesterday, kind of sitting at midpoint in here of yesterday's range. If you look at yesterday's range, we're kind of around the midpoint of that. And if we go to the 30-minute again in here, so not so much a double bottom in here, but it just needs to get back above, I think, that little swing peak there. So the overnight high, we faltered at 15,432 and a half. I think that is the key level on the top side, 444.75. Whilst below that, I'm kind of hanging on to more negativity. And if it breaks down below 15,343 and 15,313, it looks more negative. Top side above 15,445 looks more positive for me. And then obviously you've got the 13-period EMA that is sitting up at 15,432. So yeah, 435 to 435. What did I say before? Those peaks in here previously. So no, sorry, let's just jump back to them. Up through here, 445. Okay, so 432 to 445 area is going to be critical, really, for the Nasdaq. If it gets buck above there, the switch is more bullish for the day. Excuse me. Sorry, guys, I'm going to clear my throat. Sorry about that. Whilst below there, it stays more negative for the day from my perspective. Quick nod to the energy markets. So just quick nod to oil. Where are we? Oil. So just putting a start off on the daily chart. Been real choppy on the oil side. Choppy but up. Really strong moves in here. It's cleared left those peaks in here. And then a really choppy day yesterday. Big spike. Again, look at this 13-period EMA. Held through here. And then back here last week, down through and back through. And then yesterday, all the way down. Massive downside rejection yesterday. All the way down. Broke through touched the 13 EMA. Just pierced down through it. And then all the way back up again. And charging higher. So I can't say anything more than bullish on this. And it's also this morning cleared through this peak in here. This peak comes from, can't quite see it in here. Got a little something. Hold on. This peak comes from November last year, was at 83.59. This is on the September contract. Yeah, 83.59. We've cleared through there this morning. So that opens, even though we're up a significant amount today, we could push as high as like an 85 handle today, I think, on oil. All right, guys, any questions? A bit of a whistle-stop tour today, but, as I say, if there's nothing to say, we're not a media news generator. I don't have to produce news. We're traders. We're just interested in what's happening. If there's nothing much to say, there's nothing much to say. Any questions? Now, one thing I did want to just throw out there, we do have this published now, various parts on the... some people just can't keep saying, you need to tell us when the data is, because we don't know when the data is, because we don't know about macro fundamentals. We only look at the screens. So we've published this. This is all over the site now. So obviously CPI data as you should know, tomorrow, August the 10th at 7:30 a.m. Central Time, 8:30 Eastern Time. You cannot trade 2 minutes before or after, or have any orders, working orders in the order book. Okay, otherwise you will fail the challenge, or if you're a funded trader, you will lose your funded trading account. So yeah, since I've been going on about this, and since we've been going on about this in forums and everywhere else, we are getting fewer and fewer people making the mistake. We don't want to kick people off, but we're not going to risk our money in the live environment. So with people gambling over data. So yeah, there you go. So tomorrow, but I'll give you another heads up on that tomorrow. All right, guys, no questions coming through. I'm going to wrap it up there. Going to wish you all a great trading day. Take care, stay safe, and I'll be back with you with another Bull versus Bear webinar on Thursday tomorrow. Bye.